Thank you everybody for coming along today to listen to us speak about what we do. Antipodes' investment philosophy is pragmatic value. That means we're seeking mispriced opportunities relative to those businesses' underlying growth and business resilience. Understanding change is a really important part of that. Understanding cyclical change, macro social change, as well as structural change. And we've seen in 2023 this huge concentration of market performance around very few names, winners of the last decade. We think coming into 2024, that performance is going to broaden out, and understanding the changes that come behind those investment opportunities is an important part of what we do at Antipodes. This is pragmatic value in practice. Just sort of understand that we will invest across that spectrum of growth, across that spectrum of resilience. We'll buy a higher growth, higher quality business like Microsoft through to more cyclical commodity stocks or financial stocks. The key thing here is paying the right price relative to that resilience and growth that we're presented with. And understanding change is a key part of that. This is the sort of capital life cycle model of a stock and a business. And the reason that this is important and it matters is because markets are, a function of human behaviour. And humans can be emotional, and humans can be exuberant and fearful, and can misjudge change when it's taking place. And so that creates investment opportunities for us. If we think of a business that's going through a shakeout, understanding change, the change that business is going through, help us determine whether that business is actually going to stabilise and then re-accelerate into recovery, or whether it's being disrupted, it's actually going to be a value trap and continue to fall. As you go across that chart, you'll see at the point of recovery, that could be a cyclical recovery going on, it could be a disruptor that's really re-accelerating. And that will enable us to determine at the exuberant stage, again, if that company is going to continue to perform, or is it going to befall, the shakeout phase. So again, understanding change is a key part of what we do. And of course, there is so much change going on in markets. There is a lot of noise. What's going to happen with Donald Trump? Is he going to win the next election? What's going to happen with interest rates, inflation, geopolitical conflict? Part of our job is to cut through that noise, try and understand what are the true tangible changes taking place in industries, in sectors and markets that we can take advantage of as investors. And I'm going to give you 3 examples today. One, cyclical change, structural change, and the socio-macro change. In the cyclical change camp, I'm going to give you an emerging markets recovery story. On the structural change side, the functional adoption of AI and the cloud. And on the socio-macro side, the energy transition that is now upon us. So jumping now to the cyclical change, we're going all the way to the other side of the world, being Brazil. We have 18% exposure to emerging markets in our global portfolios. The thing with Brazil is it has been a volatile economy. It's gone through all sorts of cyclical ups and downs, and you can see there with that dark blue line, the inflation rate really accelerated in Brazil. Interest rates followed. The consumer was crunched, in that scenario. Now we're on the other side of that. Interest rates are starting to come down. Consumer confidence is rising. Unemployment is declining. People's ability to borrow is increasing. There's a real consumer recovery taking place in Brazil. That's a cyclical change we want to be a part of. And the way that we're taking advantage of that is through Sendas Distribuidora. This is a Brazilian grocery store. And you can see there, it's actually quite a nice grocery store. It's cash and carry. It's popular among the sort of upper demographic within Brazil. And if we look at the specs here on Sendas, this is a business that you might think, grocery is a bit boring. But this has some really exciting growth behind it. You've got this business that bought one of its competitors at that unfortunate timing of when those rates really started to accelerate. They took on debt. Now what they're doing though is that they're rolling out stores at a rapid pace. They're refurbing those stores that they bought and opening them at 3 times the rate of sales that they had before. So you're getting this really nice double-digit revenue growth rate. Then you've got the cash flow coming out of these new stores and you've got interest rates coming down. That means that they're Profit growth is 20% per annum. And you've got a business here that's a grocery retailer trading at 8.5 times PE for that level of growth trajectory. And we can compare that to a developed market equivalent of Costco. We all love shopping at Costco, but to buy Costco as a stock, it will cost you 40 times in terms of multiple. You can buy a similar business here in Brazil at 8.5 times. Going over to structural change, this is the functional adoption of AI. I think everybody who hasn't been living in a cave over the last decade will be aware of this huge structural shift that's taken place. But interestingly, a lot of that shift that's taken place has been on the consumer-facing side. We've got our Netflix that we stream, Apple Music, a lot of the Microsoft apps are on the cloud, as well as things like customer relationship management. That shift, though, is yet to take place in a big way in the less exciting side, those back office databases, the infrastructure as a service element of this cloud transition. And as that shift takes place, we're going to continue to have 15 to 20% growth coming from this cloud transition shift. And it'll come from that organic growth in the usage of cloud. It'll come from new migration, as I discussed. And it'll come from new products. And AI will be a real way for this growth to be augmented over time. And the pragmatic value way that we are playing that trend is through Oracle database business. This is a business that was very much written off by the market. About 10 years ago, the CEO famously said that he thought cloud was a fad. They were slow to move. What's actually happening here now is that Oracle's very much come to the party. You can see that those grey bars, they're on-premise. ERP stuff is declining. It's being replaced by cloud-based revenue. That is growing in the cloud infrastructure side, is growing at 50% per annum. And as they augment that infrastructure as a service with platform and with software, they're actually getting 3 to 5 times the customer value out of those businesses. So this is profit accretive as this shift takes place for Oracle. And you have a business here trading at 20 times and growing at 10 to 15% per annum. So it's growing faster than the market, and it's trading at a cheaper multiple. So it's a pragmatic value way to play this trend and this trajectory, a structural change that actually the market is very familiar with. Next, I'm going to socio-macro change. You might think, well, why is Vihari talking about energy transition as a socio-macro change? And I really think there's a confluence of circumstances that have come together that have really brought this shift to fruition now. And we've had, the societal acceptance of climate change. We've had governments coming to the party with fiscal support and regulation. We've also had a lot of technology improvement and the cost of that technology coming down. So this is something that's actually possible to achieve now. We can do it in lots of different ways. We can do it through removal, sustainable forestry and things like that. We can do it through abatement. We can also do it through efficiency. And efficiency is sort of the least, maybe exciting one of those. It's things like using insulation. It's reusing materials. It's, having more energy efficient air conditioning in your home. But efficiency is actually quite a broad-based investment opportunity within this broader circle of shift that we're seeing. And the way that we're participating in that is through this company called Saint-Gobain. This is a French multinational building materials company. It's part of our broader exposure to European-based multinationals, which makes just over a quarter of our portfolio. And this is a business that has really re-engineered itself towards sustainability. If you look at that chart there, it's the acquisitions and divestments that they've conducted over the last decade or so, and they've really repositioned their business. 75% of the products and services that they sell now are sustainability focused. This is leading to higher and more predictable growth. To give you an example of Europe, 90% of buildings actually need to be retrofitted with things like insulation. It's going to triple the renovation rate in Europe. So this is a business that's getting higher growth than it used to. It's getting better profitability. It's getting better return on its capital employed. And it's getting better cash flow. So they've actually increased their dividend. They're buying back 6% of their stock. And this is a business that's trading on a single-digit multiple. This is a multiple that is at a 10 to 15-year low for a business that has better forward-looking economics than the past. And the reason for that is because of higher interest rates. People are worried about the mortgage cycle, and they're worried about what's going to happen with new builds and things like that, when the reality is this is a story that is about sustainability, and the market, in the classic sense, is missing the point when it comes to the future of this business. So again, we were able to buy this at a very compelling valuation, and again, participate in a shift that the market is well and truly aware of, but in a pragmatic value way. Bringing all that together, we have a portfolio of 60 securities across global markets. We start with industry-led research. We want to understand change. We want to understand disruption in industries. And as a result, we often will have more than one stock idea that comes out of these shifts that we identify. So we do have a number of exposures in Brazil as that cyclical upswing takes place. We have exposure in China. On the functional AI adoption side, we have Oracle, as I discussed. We also have an investment in Microsoft. And we also have TSMC, which is sort of the pick and shovel play of the AI revolution. You need, the manufacturing of leading edge chips in order for any of this shift to take place. And then the energy transition, I talked about Saint-Gobain. We also have renewables business there, and we also have utilities businesses. So of course, over the course of our research process, which is extraordinarily deep on each and every industry, we'll construct that portfolio of 60 securities, which will have a truly global flavour. Pragmatic value. To close, I'll just repeat what I said before, which is that we are looking for those mispriced opportunities relative to the underlying business resilience and growth. And the key part of doing that is to take advantage of change that's taking place in markets. Thanks very much.